Hi, you're watching Russell Market Week in Review for the week ending April 24th, 2015. We're coming to you today from Russell's world headquarters right here in Seattle, Washington. I'm Mark Soupiset, and I'm joined again this week by Erik Ristuben. Erik, good morning.
Good morning, Mark.
Thanks for being with me this week. Let's start, I thought, in China, where there have been some concerns about Chinese growth. PMI is out, not particularly great, but yet the market there is raging. Talk about that.
Yeah, it has been ripping this year.
Yeah.
Shanghai Composite Index is up over 35% on the year, up over a couple of percent just this week. So, yeah, weaker data. Now, it's important to understand that there's been a lot of consternation, a lot of worry about China for a very long time. Okay. About 9 months ago, Chinese stocks were cheap. Right. In fact, they were arguably so cheap it was unlikely as bad a news as pricing to their stock prices would actually occur. So some of this bounce, you kind of understand. Sure. But really, I think what's happening now is we're in this, again, the surreal phase of the market where bad news is good news. Because bad news economically means that the central bank is going to become stimulative. I think people are beginning to expect the People's Bank of China to become more and more supportive of the overall economy in order to continue the growth rate. But it's not just China actually. Right. Particularly this month, the Russell Emerging Market Index is up over 8%. It's on the year, it's 10.5%. Right. And I think one of the things we've seen there is that we've been kind of saying all year long the valuations in emerging look really good. Some of the cyclical forces, the headwinds, haven't been too kind to the emerging markets. Kind of the number one thing is the dollar had been so strong. When the dollar is strong, usually emerging is weak. What's happened is so far this month, the dollar really hasn't done much. In fact, it's off a little bit, like 1%. So that's just given enough room, it's not stepping on the throat of those emerging markets anymore, and I think it's giving them some room to breathe, and I think you're seeing, some returns and some bounce back. So we'll keep monitoring that, and that may be start of a trend.
Well, let me ask you about a couple of other areas around the world then, where we're sort of seeing this dichotomy of at least maybe some potentially negative news, but the markets are doing fairly well. And the first would be Europe, where this week again we saw some kind of emerging, not in an emerging market sense, but emerging concerns about the Greek bailout, and are they going to be able to repay this? And yet we saw the market in Europe doing pretty well.
Emerging in the sense of what is old is new again.
Exactly.
The constant worry.
Right.
Look, we've been saying pretty consistently that one, we think it's very likely that the Syriza government actually does come to a deal and is able to kind of kick the can a little bit further. I mean, they've got now less than a month. It's happening in May.
Yeah, that extension's almost over.
They've used their first can kick, and now they're warming the leg up for the second one. They'll probably do it. But in any case, we just don't think it's likely Greece leaves, and even if they do, we think it's unlikely it'll be a contagion. So we're really viewing any kind of downdrafts in the market. Last Friday there was a big downdraft in Europe. We're still viewing those as buying opportunities because we really don't think that that's actually going to manifest itself in any impactful way on the stock market.
And then lastly, what do you make of what we saw in the U.S. this week, where likewise not particularly great economic data, earnings are okay, but PMI not particularly good, and yet the markets are up.
Yeah. I mean, we actually, I think this is an important event that we talk about. The NASDAQ hit an all-time high closing yesterday. Okay. Now, this sounds like we've been making new highs. The Russell 1000 hit a high yesterday too, but that's one of many that the Russell 1000 has enjoyed in the last year. The NASDAQ hasn't closed at that level since 2000, and the year 2000 was March 10th of 2000.
Wow.
So it still hasn't closed its intraday high, which is 5132 and change. So, but if you're a guy who loves the NASDAQ, that's a big deal. So I think we need to kind of note that. Yeah, same thing is happening in the United States, right? The weaker data is causing the market to begin. Maybe the Fed, maybe they won't start raising rates in September. We think they still will, but you got a little bit of that. The other thing that's coming through is that earnings are coming in solidly now. Solidly with a very low bar, right? Analysts, because of the impact of the dollar, had dramatically lowered earnings expectations. As my friend Doug Gordon says, the corporations are managing to do that vertical leap over the credit card, and actually clear the bar and actually, give good earnings versus what have been very lowered expectations. I think all in all, we're expecting an economic rebound in the second quarter, and certainly in the latter 3/4 of the year from the first quarter. And we think that's what the market is expecting. We'd like to start seeing it a little bit more consistently in the data, but we're pretty sure that'll come.
Okay, and pretty sure again that September, in our view, is when we're going to start seeing
We're
those
still
rates.
there.
Okay, Erik, as always, good stuff. Thanks for being with
bet.
me today. Thank you for joining us on Russell Market Week in Review. We'll see you next week.